talk about the top 3 things that mortgage companies do not want you to know. Number 1, when you have a mortgage, if you pay just one extra payment per year, whether that's split up over 12 months or paid one extra payment at some point when you get your tax return or whatever, you could actually pay your mortgage off, a 30-year mortgage off, 7 years faster than if you just made the regular payment, just by making that one extra payment. It's because the compound interest basically just changes when you bring the balance down faster than they planned. Okay. So that's a huge way you can save massive amounts of interest and years by basically just paying one extra payment per year on a 30-year mortgage. The second thing is, if you were to refinance your property, you need to take a look at how many years you have left. Okay. Because a lot of times people will look at refinances and they may have had their property for 1 year, 2 years, 3 years, 4 years, 7 years. And they're making a comparison on a 30-year fixed mortgage, which essentially is starting over again. So some of the savings is actually because you're basically extending the term. Okay. So you want to make sure that you work with a lender that offers loan year amounts that basically are, whatever years you have left. And that's the comparison that you need to make. Also, the last thing is basically that all loan companies offer something called a recast. So essentially, if you were to come into some money that you want to pay down your mortgage balance, if you were to do that, you would pay your property off faster. Okay. It would be paid off faster, but it wouldn't change your monthly payment. All right. So if you were to recast, you can actually pay a lump sum chunk. Usually it's more than $5,000. And sometimes there's a little fee associated with doing this. And then whatever amount of loan amount is left with the amount of time you have left, whether it's 23 years, 27 years, whatever it is, they're going to re-amortize the payment, and your monthly payment is now going to be reflected based on the balance to pay off the loan in the remaining amount of months or years. So you don't have to refinance to basically lower your payment if you have a lump sum of money. So essentially there's just lots of options that you can do, whether it be refinancing or not refinancing, to basically save a lot of interest or have a lower payment. Tim Manfro, aka Mortgage Manfro.